Hi, I'm Josh Brown. I'm here as always with Michael Batnick. We're going to play our favorite game, What Are Your Thoughts? Stick around. Mike, I'm going to do the first one. I wanted to ask you about Jeff Gundlach was in the Barron's mid-year roundtable, and he said some fairly provocative stuff about the yield curve flattening. I think we're about 24 basis points wide or 28 basis points wide on the spread between the 2-year Treasury and the 10-year Treasury. And obviously, anytime the yield curve inverts, it means very not good things for the economy. Do you think there are any caveats necessary right now?
Yes, I think that what the Fed has done certainly puts a caveat on the current market. I think the other caveat is that
what they've done just in terms of how long rates have been low?
Yeah,
or?
Just in terms of their quantitative easing policies.
So it's just a totally different environment than previous yield curve inversions.
I don't know the history of all yield curve inversions, but yes, I think this time is a little bit different. Okay. The other thing is that does the knowledge change the way that this works? Like, this is all anybody's talking about. 4 inversions ago in the 1980s, like, people didn't have this information. So I think just the nature of having this information might change it going forward. And then the other thing is that, yes, the last 9 times it inverted, it did lead to a recession, but the average lead time was 14 months. So,
right, so it inverts. That doesn't mean the recession starts.
Yeah, so let's say that you know that the curve is going to invert in September.
Right.
Well, what do you do with that information?
You plan for a recession 14 months later.
Well, you write a few blog posts, and then
you write a blog post immediately. Also, so what you're talking about is like that thing where when you're observing something, you change it just by the mere fact that you're observing it.
Yes.
All right.
Reflexivity of sorts.
I think that's fair. What do you got?
All right. What are your thoughts on the stock market? Just like
is it good or is it bad?
I don't know. What do you think?
Well, now we're at the point where we're saying like only the Russell 2000 and 5 tech stocks are going up. Like, I guess that's what people are saying. I think it's more than that, but I just think like there's disappointment that the industrial stocks and the bank stocks
and transports.
Yeah, like why aren't they making people money if GDP is like 4% plus in the last quarter and tracking maybe toward 5? Like, why aren't people making a ton of money in economically sensitive stocks? And maybe the answer is jitters about the trade war or whatever. Scientific. But I guess I'm just surprised that I don't know why I'm surprised, but I am. That it really still is the same stocks that have been working for years, and not a lot else is happening. I don't know. That's my opinion. I wanted to ask you, on the same note, it's a flat year for stocks, so we're plus 2.5% on the S&P, and I guess like I was thinking about it the other day, is that so terrible? If we just came off a year, 25% in 2017, I think we're annualizing since the crisis at 15% a year or something. Like, is it the worst thing on earth to just have a flat year? And maybe that's actually the best thing we could hope for if this thing is going to have legs beyond 2018.
Well, of course, it's not a bad thing.
Right.
The NASDAQ 100, I think, is up close to 15% this year.
The NASDAQ's fine, right.
So the S&P 500 total return, this could be the 10th straight year of gains, which has never happened before. Would it be so bad if the S&P fell 10% this year? I mean, of course not.
In other words, how many secular bull markets have ended because there was a flat year somewhere? That's like not what happens.
I think what people are worried about is I don't think anybody would be upset if stocks were flat this year or if stocks were down 5% or 10%. I think that if stocks fall 5%, people think they're going to fall 50%. And that's a concern.
Right. So we had a flat year in the midst of this bull market. I think 15.
Well, 2015, S&P I think was mildly negative price, but total return bounced it up to plus 1%.
It was like a plus 1%. So you got the dividend for
and stocks went nowhere for 18 months from like November 2014 to whatever, May 2016.
Right.
And there was a lot of hemming and hawing, and then we reset expectations, and here we are, much higher. So yesterday, Jeff Bezos' net worth crossed $150 billion. That's like $50 billion more than Gates, somebody tweeted, and almost double Buffett.
They say the third $50 billion is the hardest. Yeah. They say.
So
I feel like he just did that in like 6 months, though, the last $50 billion, right?
Yes, that's correct.
Like without even, like, has Amazon even done anything this year? Like is the company done anything like big?
The stocks up.
Like it just kind of happened is my point. It's not like they did some transformative thing this year.
Well, Whole Foods.
Right.
I mean, they continue to just do what they do.
So
I don't
he
know.
kept a lot of his stock in Amazon, I think, is my takeaway from this. And Buffett did too, and Gates did too. But I feel like probably Gates sold more Microsoft along the way.
I don't know if that's true or not, but I think that every few years, he's peeling off $1 billion for Blue Origin, the space company.
Right, and it's like but it's like nothing in
Right.
comparison to what he's kept. So way to diversify and yet still remain concentrated enough to win, I guess. Who's number 2? Is Gates 2? Gates or Zuckerberg?
He should buy Bezos should buy Kylie Jenner's makeup company.
Bezos should buy every Major League Baseball team and then shorten the season to 3 months and eliminate the bottom 6 teams from contention, put them back in the minors. I think he could save baseball. Actually, that's my next one. I wanted to ask you. So there's no NFL and there's no NBA, and I feel like we're just in this weird time where everything sucks. And I was listening to your boy Bill Simmons' podcast.
I was just about to say it's podcast season. What are you talking about?
Literally, this is true story. He spent an hour, Simmons.
False.
No, he did.
No, he didn't.
Debating would 5 LeBrons on a team beat a team with 5 different LeBrons.
Fake news. It was 30 seconds, 60 seconds, and
No
it's
way.
a good question. It's a good question. He was talking.
Nothing to talk about.
Chuck Klosterman and him have great rapport, great
I love
conversation.
Klosterman.
It was 60 seconds on 5-on-5, and I want to throw Kevin Garnett into the ring. 5 kgs might beat 5 LeBrons.
Wait, this is you or this is them?
That's me.
But
But anyway, what's the question? What's the point?
I guess is it always like this every year? Where this?
Well, there was a World Cup.
I don't. Did you see it?
No, I didn't watch it a single minute.
I got through the World Cup without spending 1 minute watching any of the games.
Me too. So is there a question here?
No. That's
All right.
all I got.
Okay. The trade war continues to escalate.
Yeah. Have you lost any family members to that or any friends?
What are your thoughts?
I mean, we talked about it before. Like, I don't feel like it's having any impact. If you look at economic data, it's not affecting consumer confidence at all. It doesn't seem to be affecting retail sales, home purchasing.
Well, it's early. I mean, the data's not going to pick it up yet. My thought, and I'm going to answer the question that I asked, but it's having a real impact on actual people's lives, but it's not. It might not show up in the data yet.
Yeah, there's a Wall Street Journal story. I think it's the cover story, the big story today. And they were saying like Whirlpool was supposed to be the company that would be a prime beneficiary of this kind of ratcheting up of tariffs because you had like South Korean manufacturers like Samsung and LG dumping washing machines in the U.S. at low prices, and now they're not doing that. And then Whirlpool's like, well, like they had a great first quarter, and then sometime in April, May, they're like, all right, things are getting challenging because raw material costs, they need steel, they need metals to make these things, are now going up. So it almost proves this consensus opinion that no one wins a trade war. So I guess I kind of thought that was interesting.
Yeah, only destruction. All right, next.
I wanted to ask you about The Rock. I know you see a lot of movies. I know you like to go by yourself in a trench coat and sit there. The Rock is the biggest movie star in the world. And his movie opened this weekend, and I didn't see it, probably because my kids are away.
I have not seen Skyscraper or Rampage.
Okay, so Skyscraper cost $125 million to make, and it opened with $25 million. So is it too much, The Rock?
No, I don't think so.
Does he need Kevin Hart? Like,
I don't think. Is there Rock fatigue? Maybe. I don't know. I'm not a huge Rock movie fan. I love his character and like his attitude and personality. But I love. All
right, so his last move, Rampage, did $99 million. Jumanji did $404 million.
So those are monsters. So
Fast and Furious, $98 million. Central Intelligence, $128 million.
All right, so maybe Skyscraper's just a dud, but even still, $25 million in opening weekend. Still,
I get worried because like you remember that time Will Smith put out the movie with his son.
Yeah, that
and
was
like
shit.
No one went to it, and then that was it. Like you really never saw him in a huge movie again.
Yeah, no,
it's too early.
Well, Will Smith was also like 30 movies deep at that point.
So you're not shorting The Rock yet?
No, I'm neutral.
All right.
Okay. Speaking of content, I take exception to some of the grenades you're throwing at Netflix. I think that their library is pretty good. What's going on? What do you mean? What do you mean it sucks?
They only should just make Peaky Blinders and Narcos.
How do they only make good content? That makes no sense.
Like I only want to watch shows where there's like fighting and like shooting, and I feel like that's a big part of the audience.
So do it.
Yeah, but there's not enough. And then people are like, oh, watch this thing. It's from Israel, and people are fine. But it's like people talking with dubbed. Like I stopped watching dubbed voiceover stuff and like the '70s kung fu movies was the end of that for me. I'm not watching that now. I'm a hater. All right, Nick did this thing today about. I'm just gonna read it to you because I thought it was really worth thinking about. I'd love to hear what you would say. Talking about Warren Buffett. Consider this thought experiment. Imagine having Buffett's wealth, fame, and status as the greatest investor on earth. Go anywhere you please, meet anyone you want, buy anything that can be sold. However, you're now 87 years old. Would you make that trade?
Yes.
Now, of course, no one would, but I want to ask you, let's say you're 57 years old. Would you be 57-year-old Buffett?
No.
You would not?
No.
47. You're lying.
47?
47, you could...
No, honestly, because I don't value money like that.
No, it's not just the money. It's being the most famous investor in the world.
Come on, I would hate that.
I'm 41. If I could be 51-year-old Buffett, I think I would do it. I think I would do it. You wouldn't? There's no way you would do it?
No way.
So, what are you, 33?
Yeah.
Okay, 37-year-old Buffett, would you do it?
No,
You just don't want to be Buffett.
I don't need to be a billionaire. I have no aspirations for that sort of life.
All right, we're not going to see eye to eye on this one. I'm ready to do it right now.
Well, you're wrong on Netflix. You're wrong on Simmons. You're wrong on Buffett.
Okay. You want to close strong here, or are we done?
That's it.
All right, that's it for us. Thanks for tuning in. As always, leave comments in the comments section.
And leave subtweets on the Twitter.
Leave subtweets on Twitter. We'll talk to you later.